CFI, the complete guide to trading. Note, rather than looking for an absolute P by P ratio lower than 1.0, investor may just look for companies with a P by P ratio that is relatively lower than the average P by B ratio of similar companies in the same industry or market sector. First, a value stock should have a P by B ratio of 1.0 or lower than P by B ratio is important because it represents a comparison of the share price to a company's assessed on major limitation of the P by B ratio is that it functions best when used to assess capital intensive companies, but it is less effective when applied to non-capital intensive firms. Second, the price to earning P by P ratio should be less than 40% of the stock's highest P by P over the previous 5 years. Third, look for a share price that is less than 67% to third of the tangible per share book value and less than 67% of the company's net current assessed value NCAV. Note, the share price to NCAV criterion is sometimes used as a stand-alone tool for identifying undervalued stocks. Graham considered a company's NCAV to be one of the most accurate representation of company's true intrinsic value. For a company's total book value should be greater than its total debt. Note, a related or perhaps an alternative financial metric to this examining the basic debt ratio, the current ratio, which should be greater than 2.0. 5. A company total debt should not exceed twice the NCAV, and total current liability and long-term debt should not be greater than the firm's total stockholder equity. Investor can experiment with using Graham's various criteria and determine for themselves which of the valuation metrics of guidelines they consider to be most essential and most reliable as indicated. There are some investors who still use only an examination of stocks P by B ratio. Others rely heavily, if not exclusively, on comparing current share price to the company's NCAV. More conservation investors may only buy stocks that pass every one of Graham's stock suggested screening test. We think you will find that the incorporating at least some of Graham's value investing principles into your portfolio selection process will improve your overall stock trading performance. Alternative methods of determining value. Value investors continue to give Graham and his value investing matrix attention. However, the development of new angles from which to calculate the assessed value means that alternative methods for identifying underpriced stocks have arisen as well. One increasing popular value metric is the discounted cash flow DCF formula.